We are now going to start. So myself, Dr. Rakesh Agrawal, Secretary General, Risk Management Association of India. So before today we have with us Mr. K V Prasad as our guest speaker. So before starting, I'd like to just give a brief introduction about our association. So maybe most of you know about us, but today we have few guests from Bangladesh, Nepal. So I'd like to just give a brief introduction about our association, and then we will take the proceeding forward. Just about our association, this RMAI is a global body dedicated to education, research, and development on risk management. So we started this association long back, and in the year 1992. And basically, the idea was to create a common platform for risk management professionals, insurers, bankers, corporates, and all other related professionals to exchange views, identify trends, and explore avenues for risk literacy. So over the last few years post-COVID, we have been regularly doing a lot of engagement in terms of risk space. So basically, our activities include online courses on risk management, seminars and workshops, webinars. Then we regularly conduct technical paper writing contests. So we conducted a number of webinars in the year 22 to 23. So these are some of our partners who are associated with the institute. So here is a list of our governing council members. In respect of online course, we started this 30 hours risk management course, certified by RMAI and the ICP London. So this course, this is a 3-month course, and we received a very good feedback for this course, and still we keep on getting new enrollments and new members from different countries. And apart from this, recently we have launched few other courses related to risk management, then some courses on motor insurance, health insurance. More courses are in pipeline, so that will be launched soon. So before we hand over the session to Mr. Prasad, I would just like to give a brief introduction of Mr. Prasad. Mr. Prasad has more than 40 years of experience in the insurance industry. He started his career from New India Assurance Company Limited as a direct recruit officer. He had the opportunity to administer claims under Bankers Indemnity Policy of Bank of India, Central Bank, Union Bank of India during the year 1983 to 96. In 1996, he was posted as Country Manager, Thailand. Thereafter, he worked with me to directly interface with clients. Currently, he is also working as an insurance surveyor in miscellaneous lines. So he is quite passionate about teaching in insurance and regularly takes sessions for various management institutes, insurance broking houses, and general insurance in India and Thailand. So over to Mr. Prasad for the session. And at the end of the session, we will have a Q&A. So you can jot down your queries and you can put it in the chat box, or at the end of the session, we will take it. Mr. Prasad, you can start the session. Can you hear Mr. Prasad?
Yeah. Good afternoon, friends. Am I audible and then the screen is visible? You can give me thumbs up. Anybody can. Share whatever learned during my career in the insurance industry. This is how I would like to share my thoughts in this order. First, set the context. Most of you will be knowing, but still I would like to see how I have seen the ownership pattern of the banks and then the insurance companies. Then the background of how the policy was structured earlier and now how it is emerging. And some of the claims which have really posed serious challenges to my understanding, especially of the way the policy is structured, how to interpret the policy conditions, and how do you process the claims. And what are the new challenges we are seeing in this business of offering protection to the banks? And what is the trend? And some of the suggestions which are given to various banks and insurance companies during my claims administration efforts. And then later on, we'll conclude with the discussions. If you look at, this is how I would like to present it. Who owns the banks? Okay, this is the balance sheet of a large scheduled nationalized commercial bank as on 31st March 2022. On the left hand side, you know the capital liability, right hand side, the assets. The capital of this bank is 1,800 crores. I hope when I use the term crores, it is available. Multiply by 10 times, it becomes million. It is in INR. 0.15% of the total liability is capital. 64,000 crores reserves are there. And look at the deposit, 10,86,400 crores worth of deposits. Okay, which means reserves and capital is 5.39. The rate is to 88.54. That is the huge ratio that exists between capital reserves and then the deposit. Typically, bank does business with the deposit holders' money. So we are very clear on that. Come to the investments. Investments is 2,82,000 crores, advances are 7 lakhs. Which means what? Bank is doing business with the deposit holders' money. When I make the statements, that means bankers are trustees of the deposit holders. Correct? Owners' money is only 1,800 crores. This reserves and surplus is created by what? By good deposit holders, good borrowers, and more importantly, good employees in the past who have done the business judiciously. They created the surplus. That surplus after payment of dividend is capitalized. So 1,800 crores capital, you have a reserve of 64,000 crores and you're doing deposits with 10 lakh crores, you're doing the business. Hence, it's very critical for the employees. Okay, I'm using the word consciously, employees and management to have control on bad loans, management expenses, investments, and advances. Okay, so that means you're really a trustee of the deposit holders and you're past the family silver that is there in terms of 64,000 crores and also the owners. Now, how does it look for a general insurance company? I've consolidated the figures as of 2022 for the general insurance companies. Before that, I would like to share this statement. Insurance policies, all of you know that it is drafted by the insurance company. Okay, what is the implication of that? Any error is interpreted in favor of the customer. Insured means customers. So this is the biggest challenge insurance company has got, and then the strength for the clients also. The order of interpretation of any insurance policy is first the printed clauses, then whatever clauses you attach, and any handwritten and sealed. Please bear this in mind when we are handling the claims. From that perspective, I'm sharing this. And more or less worldwide, okay, this is the holding pattern. You take any country's general insurance company's balance sheet and everything, and the business figure, this is how it looks like. And the fourth point which I would like to emphasize is that world over, insurance industry is the most regulated business. Okay, government has strict control on that, how you do the business and where you invest, how the funds flow, everything, continuous monitoring is done. The general insurance industry or life insurance industry, both, is one of the most closely, tightly regulated industries in the world across all segments. Okay. Then you will see the capital of the public sector insurance companies put together 18,000 crores, and they have a reserve of 37,000 crores. Private companies 8,500 crores, they have a reserve of 10,000 crores. This reserve, when I say that, it is the same accumulated underwriting profit capitalized by the insurance company. That means 27,000 crores worth of capital, you have 47,000 crores worth of reserves. With this money, you are doing a GWP, means the premium that you are writing. 78,000 crores you are writing with 18,000 crores capital. 1,45,000 crores you are writing with your own capital of 8,500 crores, which means basically you are doing business with the support of the reserves and then the reinsurance. Okay. So let us come to the business side. I am not going to touch it. What are the investments of the insurance companies? You have a capital of 18,000 crores, you have total investments of 2,45,000 crores. 8,500 crores capital, 1,35,000 crores worth of investment the private insurance companies have already built up. You see the trend? The increase of investments of the public sector insurance companies is only 8.29%, whereas the private insurance company is growing at 27% over the previous year. They're growing leaps and bounds in terms of investments. Good business practices. So total investments 3 lakh crores. When you are doing a business of 2,20,000 crores, your money is 27,000, 47,000 crores worth of reserves. With this money from my direct business, insurance companies, we have made a loss of 20,000 crores, underwriting loss, 11,000 crores of underwriting loss. Total loss from the operations is 31,000 crores, which means from my main business, I'm using myself also as one of the insurance employees because for a major portion of my career, I worked as an underwriter, business head, and all those things. So that is why I use the term mine. Okay. So 31,000 crores worth of losses I have. Look at the investment income. 20,000 crores losses and 14,000 crores investment income. So 6,000 crores net loss. 11,000 crores losses, 17,000 crores investment income. So 6,000 crores net profit. Total industry put together per se, 32,000, 31,000, 1,000 crores worth of small profit we have made. Who has contributed for the losses? Health insurance, motor insurance, cost of acquisition, and catastrophic insurance. And where have the investments gone? Major investments of the insurance companies or the infrastructure industries. And you will not be surprised to know that any A category, A-listed companies in the stock market, you take insurance companies are the leading shareholders. Here I have put both life and general. Insurance companies are the major shareholders of the capital. Next big thing that is going to happen, already it has started happening, is that pension funds are coming into the country. They are still going to be still bigger than the insurance companies. Canadian pension fund, Scotland pension fund, they are really big. They can fund the state government's requirement in one shot. That's that big. So when you see this, insurance companies, we are, as an employee, I'm talking, we are trustees of the policyholders' money. Hence, I need to be more careful about the management expense, claims, cost of acquisition, and investments. This slide, of course, when I showed it updated for the past year, I took a class for the promotee judges. Okay, in one of the Judicial Academy. I can even take the name because in Karnataka I took a class. They wanted to know how to interpret the liability policies, how insurance companies interpret the liability policy works. When I started with this slide, okay, you have seen this slide now. Forget about the updating the figures. This is about almost 10 years old when I took the class. One judge remarked, that means, sir, what you are intending to say is that insurance companies are trustees of the policyholders? Yes. So which means when I am giving an award in a motor claims policy, even without license you pay, I was thinking this is government money, the socialist objective. So what is wrong in paying the victim? After all, it's the government's money. Am I wrong in my thinking? Before even I could answer the question, another participant, another fellow judge, he said, yes, insurance companies are contracts, commercial contracts. We have no business to interpret outside of the policy conditions. You see how the thought process came in that small room of discussion itself. Of course, they were very, very critical participants. They themselves said, I can't interpret the policy outside the contract, commercial contract. So the consensus that came as we are trustees. And one more statement the judge made, which had never struck me. I still keep on brooding over the statement. Do you mean to say at any later stage, somebody can sue us for breach of the trustee guidelines for having awarded the contract outside the scope of the commercial contract? Can anybody take us to the court as a judge? He said. I said, yeah, you are. Then I told him I had to interfere. And he said, yes, sir, it's a very valid observation you have made. Can somebody sue me for making a wrong claim, approving a wrong claim as a trustee? Very interesting discussion. In fact, some of the judges who got grown up the ladder, they still call me for interpreting the policy conditions offline personally when I help them with interpreting it. Great learning experience I had from that Judicial Academy one session. That is why I would like to share the thoughts with you. Even you can also, when you take classes or something like that, please emphasize to the banks and insurance companies that we are all trustee holders of the deposit holders and the policy holders. Then your approach to business changes because you have more responsibility. Now, who are the stakeholders in the business? Insurance companies, government regulations are very heavy. Now we look at the various stakeholders who are the role players in it. Policy holders, account holders, borrowers, we all have got stakes in the, when I say stakes, when I say it is the commercial success, solvency, operational management of the banks and insurance companies. Okay? Protection of the deposits, investments, mutual policies, operational level understandings. Even the reinsurers have stakes in the insurance companies. Yeah, you are aware of that. Now, next is the legal. Courts have a stake in the operational parameters of the insurance companies and bank because they interpret the policy conditions. Ultimately, any legal dispute, they interpret the policy conditions. I might have underwritten, but I might have interpreted as a surveyor, as a claims person. If there's a dispute, the judge's interpretation will prevail over my interpretation. Correct? We have seen those cases. Then police. They have a very strong role in playing, establishing the laws, punishing the culprits, and then creating the deterrence amongst the industry. The regulators have a stake in the operation of the banks and insurance companies, both RBI, IRDA. They have a local regulator because they are very keen to ensure that you comply with your own underwriting guidelines, country guidelines, and prevent default in paying the claims. As a surveyor, I have a stake in the insurance company because when the claims happen, the proximate cause I take and interpret and then see that whether that proximate cause goes through the filters of the policy conditions. So I have a stake in ensuring that wrong claims don't go through and then the right claim don't get stuck. Okay, both plus and minus, positive, negative, I have the responsibility. Come to the employees. They have a stake in the bank and insurance company in terms of when they say the job protection, the pride with which the employees operate, the respect that they get in the society, social status, self-esteem. Nobody would like to work for a company or a bank which has gone bankrupt. They would not like to put it even in their profile. Government has a stake, correct? Banks and insurance companies are the pillars of the economy for the country. So banks have a stake in the performance, stability, and operations of the entities. Shareholders have a stake. Their long-term investments, return on the investment, the capital protection. Banks are used to develop their group business. Okay, so carefully they also operate over there. The credit card and debit card companies, they are banks and insurance companies are the engines through which they operate. So even they have a stake. Software providers, now that is becoming a big business. Banking software is one of the biggest business provider for the banks. Insurance company software, one of the biggest business provider for the insurance companies. Stock market, I need not emphasize more what is the role played by the banks and insurance companies in pumping in money to the capital market and also in playing a role in stability. Okay. Now, so economy has at all levels when we have stakes in the safety security of the banks, look at the role played by the employees and when you're doing the business, this many security stakeholders are the interest we have to protect. Not only my banks, my insurance companies, capital, investments and everything, this many other stakeholders also I need to protect and then do justify their interest. Am I able to make the point? If they are able to hear me also, anybody can raise a point at any particular stage. Now, I joined the industry in 83 as Dr. Agarwal introduced me. When I was servicing this business in Mumbai, I got the lifetime opportunity to learn the banking operations of Bank of India, Central Bank and Union Bank. That is where I was roped in as one of the rookie officers. IBA, that is Indian Bank Association of India, and 4 public sectors. Jointly, they formed a committee to draft the new policy wordings for the bankers' blanket policy. That is how the effort started. And then we were jointly, this policy has been drafted and then given. The current policy, base wordings policy of the bankers' blanket policy. It has been done in 1984. Now, at that time, the focus was more toward the physical hazards of the bank. What are the physical hazards we were looking at? Fire, dacoity, looting, bank robbery, physical document frauds, employee fraud. They were the focus. If you see the basic structure, it is more oriented towards those type of exposures. Then insurance company was very clear that breach of guidelines will not be covered. Even IBI agreed also to that. But then they made a request, if any insurance company wants to cover breach of guidelines, you charge, underwrite separately, charge premium and then cover it. So they gave a window of opening to the insurance companies and banks to cover these guidelines. This proved to be very tricky in the long run, you will see. Then insurance companies insisted, whenever any claim happens, first you have to do the internal inquiry. You have to compulsory lodge a police complaint whenever frauds happen, FIR, and then pursue recovery. Employee fraud cases, it has to happen with the action as per your internal CDA rules. You can't give any, there was no escape from that. And inevitably, it led to police action, CBI, court cases, because in those days, most of the banks were in the nationalized sector. Whenever any bank fraud were, police was very strict on that, even CBI got involved, court cases made. Please read the footnote. I felt bad, but there was no option. Some of the employees, generally, they were very careful because in those days, getting jobs in the banks were very difficult. Getting a job in the bank, it was a social prestige status. So any employee who was implicated in the fraud, it used to result in imprisonment and suspension and all those things. I've seen cases wherein employees have committed suicide. Okay, to that extent, they used to feel ashamed of that. And generally, deterrence prevailed among the banking companies. The frauds were very less, the employee frauds were less. I would like to say that. And then recovery from fraudster assets was always a challenge for the banks and then insurance companies. Because even the attached assets, mortgage assets, laying the bank's hands on that was difficult. Premium rate was always adjusted for the emerging losses. So that is how the insurance companies did not suffer underwriting losses from this business, because this was a very, very tricky business from the beginning. As we look at some of the claims, you will realize that. And how were the claims, the trend of claims were coming was, in the scheduled banks, normally employee fraud and bank loan were the major contributors to the claim. They contribute banks. In cooperative banks, employee fraud and senior management level involvement frauds were happening. So that is why insurance companies were not very comfortable in giving bankers blanket policies to the scheduled cooperative banks at the state level. The deterrence ensured that quality of supervision was quite high. In those days, physical supervision was there. So that is why it was fairly easy to prevent frauds, for example. So in the initial phase, coverage was theft due to looting, in transit, forgery, dishonesty, hypothecated goods. Fire policies also we were covering it through the bank assurance business, registered post. Pygmy agents were covered. We were getting small ticket items. Still, we had proposed because IBI at that stage itself, they had asked us to provide ATMs are going to come in India. You provided cover for that. So we provided for looting of ATMs, damage to ATMs, like that. We were just thinking. We never realized what is happening now. We could not even comprehend that. Counterfeit currency was still not a big exposure. So we had left it open. We wanted to cover that. And infinity, the bank appointed outsourced service providers. When we said that, it was only security guards was what we were meaning there. Because other services now it is going to come, I will mention it to you, you will be surprised to what extent outsourcing has happened. Then loss of keys, spurious gold cover. This was one cover we had given that has generated a lot of claims as we see. And the cover was structured because banking operations were largely manual. Even customers preferred face-to-face style, both retail and corporate customers. Okay, continuous interactions with the bank, physical interactions were there. That is why claims were manageable. Claims were submitted post-investigation. That means 50% of the job was done already by the bank's audit, internal investigation department, and vigilance department. As a claims person from the insurance company said, our interaction was with the vigilance department and the audit department. So it was fairly manageable. Okay, come 2000. I'm putting the word 2000 when the industry got opened up in India. When it got opened up, request for commercial crime came. Errors and omissions came. Even the software glitch because a lot of software net banking started happening. And they wanted to exclude, software company wanted to exclude their responsibility from this policy. Okay, please mark this thought, this statement, and then later on we'll discuss on that. Some of the big software providers are TCS, Infosys, Wipro, or all these companies are provided. I'm taking the names also. They wanted to have the protection from the insurance companies suing them for software glitch. Then MasterCard, Visa, and everything, they wanted to have the protection against their liability from these thefts. This is how it started. Then commercial general liability got added on. Negligence and errors transferred due to payment. Even D&O also, they wanted to have it, but separately it is structured. Outsourcing of the core activity. Now this is the big emerging area of exposure to the banks and insurance. Outsourcing, even the identifying is soliciting the borrowers has happened. I'm seeing claims here. One company is established, of course, under the close monitoring of the bank. They source the customers and then give it. As per the agreement, they have no authority to sanction the loan. So when I ask the question, when you don't have authority, where is the responsibility for fraud? Okay. If I continue this conversation, it will go in a different direction. So they have introduced another clause, excess of percentage of bad debt, they are responsible. Now, believe me when I say this, at these companies, the small companies, staff have tasted the blood. You know what they're doing it typically? They create the fake customers, loans are approved, loan amount is drawn, that amount is given in the private money lending market. Okay? Money lending government is through NABARD and all this, they're giving it a concessional rate, and loans are given at very high rate of interest. So the rate of interest is so high that they can even absorb the bad debts. But when it crosses the limit, claims are coming. This is the big exposure banks and insurance companies are sitting on now. Okay. Professional liability is added on. Now the new thing that I have seen in some policies is that your non-compliance of the RBI guidelines, internal guidelines, I think they want the protection. So even if you don't comply with the NEFT guidelines, for example, KVC guidelines, for example, If there is a claim, insurance company has to pay. So these type of endorsements are coming onto the banks, and then the policies are getting added. The result of that is basic bankers blanket policy. That is a base policy for which you start with. Then all these clauses, when they are added on, if there is any conflict, what wordings do you have to interpret? That is where, please go back to my old slide. When I said that base policy wordings, add-on clauses, addition to terms and clauses. That is where I indicated to you in that slide. This is the challenge which we are, as a surveyor, we are all facing. Even as the insurance company, we are facing. Even the bank, corporate office also is facing in putting it, where do you want to put this, and which clause you want to make a claim, tenable claim. Okay. But now what has happened is, after creating this structure, private insurance companies are cleverly avoiding the bankers blanket program. Most of the bankers policies are on the lap of the public sector insurance company. Policies are complicated, and they are with the public sector companies. Now, I will present some claim scenarios. I have modified to a large extent, to the best possible extent, to conceal the identity of the customer, bank, and everything. I will run it past through the banks also. I run it past through the insurance companies also. So we are clear on that. Now, this was a case where is a very big customer for the bank. Bank manager gets a call from the customer. Truecaller identifies this as the owner. So initially they have a conversation for 1 or 2 minutes about the FD, new FD rates you want to keep it, bulk FD rates. Call get disconnected. After some time, one more call comes. The other side, the MD says, my checkbook is exhausted, I'm going out for a meeting, kindly do NEFT transfers, blah, 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 everything. He just says. When he says that, bank manager, his mind is already on the fixed deposits that are likely to come. He immediately says, yes, sir, please give a request. He gets it. First 3 transfers come, 3 lakhs, 2.5 lakhs, like the small transfers. Immediately he transfers. Then next 3 lots, he keeps on getting the request in 3 lots. In no time, 15 transfers are done, totaling to 85 lakhs. Okay? He's already approved it. Then, after some time, the customer's accountant logs in and then sees 15 transfers have happened. He immediately calls up the bank, and the bank manager is shocked. Immediately, he freezes this. They contact the recipient banks. There are 4 recipient banks. They are all in different parts of the country. This happened in South India. The banks are in Bengal, UP, Rajasthan, Madhya Pradesh. Okay. Those banks, they got branches in this center. All the branches are hardly 100-200 meters away from this customers, this bank. When they go and then want to give a complaint, they refuse to take the complaint, freeze the account. They say, you come through the proper channel. Okay. This claim has come to me after almost 1 year. Cyber Police is investigating. Now I asked the question to the department, how can you initiate a transfer on the telephonic request? So it has happened, sir. I said, 1 transfer you can do it, emergency. Then should you not immediately send a mail to the other number, other email ID of the customer, bank accountant or somebody, to confirm that, ask them to send a mail. 14 transfers, 1 transfer, okay, I accept. It can happen. How is it possible? That means there's no deterrence. Then he says, then you know what the bank is trying to invoke? Breach of the internal guidelines. Also, they have covered, sir, you have to admit the liability. Now you see the challenge I got on hand. Okay, next claim. NRI sir, he's in Kuwait. He had given the debit card to his senior citizen father in Delhi. Names come out, the cities and everything to me. And they had an attendant boy. He was taking care of the father, aged father. See, he had drawn 11:45, 11:50, 11:55 p.m. Okay? In a day, 3 withdrawals, 12:05, 12:10, 12:50. They had drawn the money. Over a period of 1 week, he had drawn the money. Total amount drawn is 21 lakhs. Okay. Now you tell me, where is the bank responsible? Debit card, what he had given to the father, he has given it. And despite the alert, okay, son is in Kuwait. When he gets the message, should he not see why my father is going and withdrawing 6 withdrawals in the middle of the night? Day 1, day 2, day 3. He says, I didn't bother to check. And he's a big deposit holder. When he's a big deposit holder, the challenge we are getting that is, bank wants to be soft on his claim. Now, if he is the bank responsible for this policy, where is the negligence of the bank? Okay. The challenge we are facing is, please keep reading the footnotes. If wherever possible, I'll read that. And the non-cooperation between the banks is another big challenge we are facing. Now, this was a very interesting case. I got it. The account holder was the personal assistant to the Chief Justice of the High Court. Okay, so high profile. That lady has changed her mobile. Now, this is the number. She has not bothered to inform the bank about the new number. Old number to be blocked, new number. Then amount has been, and she has not bothered to update the passbook also for 2 years. Okay. 88 lakhs has been withdrawn from the account. She is coming and making it. If somebody has fraudulently withdrawn the money, you have to make good. And the bank manager, even at the corporate office, they are getting calls from the Chief Justice office. I'm not exaggerating. Where is the negligence of the bank? And you know, when I met this person, this lady, she had come to the bank for a discussion. She said, you show me in my passbook where I should get my passbook updated, where I should update my mobile whenever I change. You show me the passbook. She was talking so adamantly. Pardon me for saying this, I got cheesed off. And bank is under pressure. And finally, you know what they did? Sir, you withdraw from the claim, we will take a commercial decision. You know the meaning of it. Next claim. You see how, at least savings for the insurance company, I will just say that, but I feel bad for the bank. Then forgery, you know what had happened? You're all aware how it can happen. 50,000 check was altered to read as 50 lakhs. The decimal point was removed. And the recipient immediately discounted the check. The recipient bank was private. Paying banker was where I did the survey. And the recipient customer's KYC turned out to be fake. Now, with fake KYC details, the bank account is opened, means who is responsible? And that private bank went to, there is a quasi-judicial body. Most of you are aware of it. Paying banker, recipient banker, one from the lead bank of that place is also on the panel. Together they discuss and then they apportion the blame. In this case, they apportioned the blame 90% to the paying banker, 10% to the recipient banker. 90% of 45 lakhs, 50 lakhs minus 50,000 was allocated to this bank. Where is the liability for this? Next claim. This is a very interesting claim. I wanted to share this, please. When I said active non-cooperation, this is a classic case where I want you people to focus a bit of an attention. This customer he's a wife of a defense attaché of Indian embassy posted in US. Countries have changed it, but she is the wife of a defense attaché. Okay. In the mid of the night, she gets 4 debits. SMS she gets it. 2 in euros, 2 debits, and 2 in British pounds. In the mid of the night, this lady calls up the bank helpline number and lodges the account. Next day morning, she goes to the bank and then she gives a written complaint. And I get this survey after almost 1 year. And she's able to prove that she has not traveled abroad. She gave all the passport copies certified. She has not traveled abroad. Then when I was just looking at that case, issue was how did this lady's debit card details went to somebody in Channel, between France and Britain. 1 month back, she did some online shopping. At that time, the card was hacked. Okay. Now, is the bank responsible for if the card is hacked when you do online transaction? question. But you see the surprising thing, I just took a chance and wrote to the channel authority, such and such a thing has happened. Can you please investigate and respond back with your analysis? First, immediately I got one standard reply. Thanks for your mail. It's an auto-generated mail. I thought nothing will happen. But after 3 months, when I was processing the claim for payment, the recommendation, all this, I get a mail from the channel authority. They have given me the video extract of this person from Paris, from France, and then when he arrives in UK, 2 debits, and he turned out to be an Algerian illegal immigrant. He was arrested and deported. And they reversed pound debit. So claim had to be processed only for the euro debit. Although it happened, everything happened outside the system, bank system, but still I was happy to process the claim because I was overwhelmed with the response that I got from the channel. What I would like to emphasize, this has to be the response of all the stakeholders. Between banks, there has to be cooperation. Between police and then the banks, there has to be extensive cooperation. This is very important in minimizing and then handling the claims. And across territories, they have cooperated. Now, this claim is extremely challenging claim that I have got it. I'm still processing this claim. 4 banks ATM cards are used in this bank, and the money has been pulled out. The total money that quantum that we got is 18 crores. Okay. The recipient banks have account debited, but it got reversed. So now those banks are refusing to make good the money. This bank where I'm doing a survey, they have suffered a total as of now 18 crores loss, and still we are counting the money. We are trying to figure out whether how could these ATM cards be manipulated such that debit card don't come. In fact, during my discussions with Mr. Sridhar Kalyan also, I just brought out this topic because he's a cat in the banking risk management thing. How can this happen? He's also breaking his head to think about this situation. It's a very, very difficult claim, big claim, and we have to maintain the confidentiality also. And then the challenge we are facing is non-cooperation from those 4 banks. Next is the very interesting claim we have got. I'm still trying to figure out where is the liability, who is the bank responsible. Because this is a quasi-judicial, quasi-government undertaking. They keep bulk fixed deposits. They have an arrangement, discussion with the bank, 3 years fixed deposit they keep, rates, terms, everything is fixed. So they keep deposit 100 crores, 200 crores like that. They have placed various deposits. Each month they place deposits. Multiple deposits they are placed. It's a big undertaking. Okay. What has happened is over a period of 3 to 5 years, moment the deposit comes, immediately after some time, the deposit is redeemed and then placed with another name. Okay. Then at the end of the 2.5 years, because the deposit is for 3 years, when it comes to 2.5 years, that deposit redeemed and then again placed back with the original name. You got it? Which means for 2.5 years, it is in a different name. And we know the total deposits, 25 fixed deposits are manipulated like this. And interest rate is 4.5%. Average size the deposit is 150 crores. Now you calculate the loss of interest. And even this quasi-government undertaking, finance department employee also, school statement he makes, sir, I am just only checking whether the FD after maturity the amount has come to our books. I'm sorry, I didn't bother to check whether the interest has come into our books or not. Now, where is the bank responsible for this? I'm still trying to see the extent of, unless these type of things, claims cannot happen, frauds cannot happen unless there is collusion. Inside the employees, quasi-government body employees might be involved. Possibly with the collusion of the bank also, I'm not pulling it out. So if they're able to establish the collusion, then the commercial crime it gets established. I'm still trying to get into the grips of this transaction. This is the case. We all know that our ATMs, not more than 3 ATMs per day and all those things, we get additional warning and everything. Here, customer joint account is held, man and woman CCTV recording is there. 20 continuous transactions of 20,000 has been withdrawn. When the lady comes, she has withdrawn from the same ATM card, she withdrawn 10,010. So totally about 4 and 1, 5 lakhs withdrawn. Is this a manipulation of the ATM card? Do I have a rate of recovery against the MasterCard? That is where when you put no, the new trend, don't or give away the subrogation rates against the credit card companies. And from this perspective, I'm asking that the erroneous transfer, this can happen. This has happened in one of the biggest, it's very surprising to me. 21,000, 21 lakhs, 70,000, 121 has been transferred to 2 crores 17 lakh by removing the decimals. Recipient bank is refusing to cooperate, and this bank doesn't want to file a claim on them because they're very big, sir. They say they want us insurance company to pay the claim and then pursue recovery from that bank. This is the challenge we are facing. Gold loan, how it happens, most of you are aware, and for those of you who may not be aware, I'll briefly tell you. First, the customer comes, approved valuer comes, gold is evaluated, gold loan is given. And periodically, the jewelry has to be inspected. Again, different appraiser comes, different bank officer comes, and they also invite the customer. Okay, inspection is done. Again, kept it back in the safe. Transaction over. After some time, the customer comes to. Customer says, "I want to pay back the money. Give me my jewelry." Fine. So the customer repaying the loan, and then when the jewelry is taken out, it is found out that it is fake. And you know the bankers' indemnity policy, fake jewelry gold loan segment is there. On the date of loss, whatever the gold value, that is the amount where the liability is there. This is becoming a trend. Regular claims are coming. And both valuers have inspected and given the clean certificate. Is there any collusion? Unless collusion is there, cannot happen. Collusion of who? Customer, valuer, bankers, all combinations are possible here. This is the challenge we are facing. And you know what has happened? The sheer freak case, one claim which had processed, and the bank had given a letter to be saying that this appraiser has been delisted. We have removed his name from the name. And after some time, when I get the claim, same valuer, the explanation given is very sheepish explanation. Sir, we don't have proper values in that place. So we have taken him back into our panel after giving me suitable warning. Suitable warning, second claim has. This is the challenge we are facing. Now, this claim I want to present it to you people. Please view this bit carefully, because although this is not a claim under the bankers' indemnity policy, this is a claim under errors and omissions and commercial claim. At that time, when this claim came, I was the business head of, I think the names also, I was the business head of agency Chowk. This claim happened in Pune, I was in Mumbai. I got a call from the police, CBI Pune, please come to Pune immediately. So I go with my claims officer and all those people, I go to Pune, CBI office. Immediately they say, why have we not seen this claim? All those usual introductory dialogue, I don't want to say that. You know, here what has happened is, this BPO was doing back-end operations of a US bank. 4 employees gained the confidence of senior citizens in US, got their account passwords, okay? Then, you know, so smartly planned what they have done is they have resigned. Okay? In those days, employees, BPOs were facing shortage of employees. A lot of times employees used to come back. So for 1 week, they were given the gate access and also the access to their systems for 1 week period. Okay, this is what I came to know when we handled the claim. I understand even now it is their system is there, but although officially they denied. What happened was they got access during that period where they had resigned. They got the money, they took it out. It was about 16 crores, if I recollect the figure, 15, 16 crores was taken out. In those days, the dollar was 50 or 60 rupees, almost around 2-3 million they took off. When this happened, that bank has field intelligence unit that triggered the alert. How come from so many serious citizens it is going out? So the bank alerted FBI, CIA came to IB, and IBA got involved. In those days, terror funding was another serious police investigation. When we found out that these 4 employees, they were immediately arrested also. They were happy-go-lucky boys. They had purchased a villa in Goa. They had purchased expensive cars, and then everything they were. 50% of the money only could be recovered. Okay? I'm parking this claim situation here. But the bank, you know what they did? They said, we don't want to make a claim under our bankers indemnity policy in US. 100% you have to pay. The software company had to pay up the money. Software company liability came on the interest. They didn't want even to make a claim on their local insurance company because their loss ratio will get disturbed. See the lesson that is there a lesson for us, Indian banks, Indian insurance companies, software companies, the outsource companies you want to insulate. See the US bank, how they are recovering it. For the last 2 they recovered. I'm not joking. I'm not exaggerating anything here. The speed, the swiftness with which US bank coordinated the effort with the intelligence agencies of the country and how they came here and how our police also acted fast. I've never seen like that when I'm handling other bank claims in other segments. Cybercrime is always lower preference for our police. I'm sorry to say that. Unless the amount is big. So can we have a similar effort, coordinated effort in our country also? Each geography you need to have because financial crimes are proving to be a bigger threat now. Gone are the days of bank slow. Most of you would have seen even the cartoons also. When a dacoit comes to the bank officer showing the gun, the bank officer says, I got a better loan scheme. You don't have to repay the loan. Why do you want to loot the bank? It's a cartoon. But those days are there like that. We have seen big time frauds. What the lesson we can learn from these claims? This is another claim where I rejected the claim. One builder, he built 16 apartments, 16 blocks he has built. He has sold it to 80 people, 80 borrowers, 80 people he has sold. See the smart way with which he has registered the papers. Customer A, his apartment is given as G1. All the papers are pakka, 100% clear. D goes, same apartment GF1. GF means ground floor 1. Customer C comes, GF01. Customer D, GF001. Customer E, G01. So 5 customers. Like this, we have done for 80 blocks he has done. The bank which has lent to customer A, all the documents are verified with the architect, clear. Verified with the legal form, all the documents are clear. Loan is clear. So bank has followed the process. What happened? Borrower has paid 6 installments. Repaid. When he went to take possession of the apartment, somebody has already taken the possession. So he has stopped paying the installments. When he stops paying the installments, claim when it comes to me, I said, is it NPA? NPA is non-performing asset. That means it's a business loss for you. Where is the fraud by the employer, by the bank? Has the customer done the fraud? Even customer has been taken for a ride. Are you responsible for the customer's customer? That is the builder. Builder fraud, are you responsible? We don't know. So it's hanging like that. Now, next is a lot of people would have heard these classic cases which keep happening in every city in India. This is a cooperative bank. They offered high rate of interest to the people. Most of the people, deposit holders were senior citizens. Their PF money, gratuity money, everything they placed, lifetime saving, they put it in the bank. They were getting given high rate of interest. They were advertising so much. So this bank, board approved, they lent money for film making a TV serial. Okay? The film flop. 25% of the total bank deposits they have given to the loan. Bankers fail, and even some of the bank from the deposit holders have committed suicide because of the anxiety, heart attacks, suicide, everything has happened. Many of the participants who are here, who are from this one, maybe even the name may sound familiar to them. Now, you know what the challenge that I'm facing is I'm one of the advisors on behalf of the DGCA, the Deposit Guarantee Corporation of India, advising the dissolution, settlement of account, all those things. They are pressurizing the bank to admit liability to pay up to their banker's policy limit so that their claim can get triggered. These are practical challenges which we are facing it as surveyors. How do you interpret this in the policy conditions? When senior management does the fraud, trustees, that is why I use the word trustees, when they do the fraud, should the policy still pay? Whose interest are you protecting here? Right? It's a business failure. Senior management, yes, they have been arrested, but does that solve the problem for the deposit holders? Should the employees alert if these type of frauds are happening? When employees will be knowing it, when senior management approves for TV film production, does it comply with the branch's guidelines? Should he not alert? Whom should he alert? Correct? These are the questions which we are facing. This is a case that happened about 2 years back. Okay, where I would like to emphasize that is, as a banker, you follow your guidelines. If any bankers are there in this, so please know. You know what happened here? Customer is a corporate customer. He said, I don't want SMS or email when I'm doing net banking because I don't want my people to know and all this. Some story. Bank agreed for that. In this case, somebody took a, I just give the name. That's not the name. For example, it's easy for reference. This bank the customer is based in Calcutta. In Jamshedpur, somebody has gone and taken a duplicate SIM card. Okay, 430. So, moment the SIM card, and when I checked with the Airtel mobile, they say KYC is complete. Same day, okay, 1.2 crores money has been transferred. Because the bank manager, so the customers has not asked for SMS and email, no action. Next day, around 1 o'clock or something like that, during lunchtime, the customer's accountant logs in. He sees 1.2 crores is out. Immediately he alerts his MD, both accountant and MD come rushing to the bank in Calcutta. Okay, sir, my money is gone. All the story drama is happening in the bank. And bank manager says, please give me a written complaint. As he is writing the complaint, 2 more SMSs come. Okay, mark this. He is still writing the complaint. When he shows the message to the bank manager freezes those 2 transfers. Okay, story ends here. Now, 1.2 crores has to be given back to the customer. Claim comes to me, I am the surveyor. And he goes, police complaint is filed. Those 4 culprits are arrested. They have been let out on bail. Okay, all those things dramas happen. Now, when I get this, when I'm reading this, I just refer to the TRAI guideline, that is the Telecom Regulatory Authority guidelines. That guideline says whenever I take a duplicate SIM, next 24 hours from the time of taking SMS will not work. Okay, first alert I got. Then when I had a call with that customer, the MD came, accountant came, all those things. Sir, you duplicate SIM is taken? Yes, duplicate SIM is taken. So it didn't happen from your mobile? No, it didn't happen from my mobile. When you come to the bank, it came on your mobile? Yes, sir. 2 messages came on my mobile. Then I said, sir, TRAI guidelines says 24 hours SMS will not work. Immediately he goes silent. We are asking difficult questions. Immediately he is jumping on the poor bank manager and he cuts the call. And he has escalated the call to RBI government, finance minister, bank chairman. I don't know if he related even the Prime Minister's office or World Bank, like that, you know, the usual drama. I said, you do anything, you take the money through the court and deny the claim for breach of these guidelines. Bank is not responsible. And even till today, he has not filed a case against the bank to recover them. So if you are strict, that means you should know these guidelines when the bank is not at fault. So how do you ascertain the bank is at fault or no, lapse on the bank or no? Especially when you incorporate the guidelines, breach of guidelines, non-compliance of guideline liability is there. When you insert those clauses, so that means it is poor underwriting. So you catch the surveyor in a tight spot, and you show this clause. Surveyor has to recommend admission of liability, but you are not. You are doing disservice to the trustee holders of the bank, correct? And insurance companies. I'm coming from that perspective. And I have seen a case, I'm sorry to say that even to the bankers, when a claim has been paid, employee fraud was there, employee was punished. After the claim is settled, they asked him to give an apology letter and the employee has been reinstated. This should not be done. What is the message you are sending it to the employees? I'm not exaggerating here. I feel bad. And I feel sad also to see such, you can't pardon such things. Now, after having seen those claims, what is the new trend we are getting? New type of claims are coming which is posing a challenge and which is forcing both the banks and insurance companies to review the wording, review the scope of cover level. Net banking and NEFT challenges are the new thing that we are getting. Cyber attacks becoming common. NBFCs are becoming very big in their operations. Even they have to be offered protection. And there is brazen collusion at all levels. I'm not to take the names here. They are seen at big senior level collusions are happening. A lot of outsourcing is happening. And if you see the fear of law and retribution is coming. Correct? Gone are those days when employees used to commit suicide. Now, no. And even involved senior management. And cyber police also, they're so much overwhelmed with the assignments, heavy load and all those things. Unless it's a big claim, they take it easy. During my interactions with the cyber police, they are extremely intelligent people. They are able to track phone calls, frauds, pan India, worldwide cooperation is there. But so much of overload is there. They are also short of talent. So it's our responsibility to build the talent there also. It's a question which I'm posing it to the team here. And next big challenge I am facing it is between banks there is, I would say, even positive non-cooperation. In fact, I have written to IBA, even RBI, everywhere. Please ensure that is between banks you have cooperation. The reason given is Canara Bank doesn't give it to State Bank doesn't give it to HDFC Bank, HDFC doesn't give it to, because you don't give, I will not. Standard. So who is the ultimate loser? See, ATM CCTV extracts you don't want to give. You don't want to share with your own team members. And high quality documentation frauds and non-compliance with the regulations. And next thing is that we are saying that is, as a mobile, now all of us are crazy about the mobile. I download apps and all those things. I download an app because of which all the account passwords, everything is in my mobile these days. Correct? And mobile is hacked. And everything happens outside. How is the bank and insurance company responsible for the loss that I suffer to my account? Correct? Duplicate SIM card taken. I gave the case. Correct? How is the bank responsible for that? Now, this is the reason I'm putting it up. Now, next is, how do you make good these losses? Okay. Lapses are happening. Earlier, when that is where I put that bank's business, bank assurance business, if you give it to the insurance company, which at least you can make good the underwriting losses. Bank assurance is becoming almost 30-40% of the premium generation now. Compensate your banker or insurer who writes the bank indemnity policy because he pays you those claims with the business. At least give the business. I'm not saying those business will not generate claims. That is different. At least the bank has to do justice to him. Bank assurance business is taken away by somebody. This junk business is with somebody else. It is unfair. So please do justice to them and make them your book profitable. So it's a win-win situation for everyone. Active cooperation between banks and insurance companies is very critical. I'd like to play this video. You just look at this, then we will see what is the subject. Is it audible and visible? Can anybody show thumbs up? Just see now. I mean, I don't agree with that suggestion. Pull it and then see if I'm going to damage the ATM, but it's a comment. But see the suggestion. See how smartly it is done. See how smartly they have done it. Now, this is a case of damage to the ATM. Correct? Who suffers the loss? Customer suffers the loss. Now, my question is, I'm coming from the insurance policy side, coverage side, and all those things. Security is mandated at all ATMs, 24/7 security is mandated. Still, if this happens, is this non-compliance to breach of the policy condition? So should we admit the liability? Damage to the ATM is one. Okay, electronic damage or that. We'll look at that later. Now, customer loses the money. Debit card or details are cloned. If the cash is lost, will there be a claim under the policy? I would like now, after seeing this video, you have handled the bankers community business. I would like to have your thoughts on this when you respond to me back. So, who is the failure? Is there an impact on the claim? Next is, I also would like to pose the question, security company is outsourced now. So can I recover this loss from the security company for having failed to provide proper or suitable security at the ATM, which has resulted in this? So think from that perspective also. Because when I pay the claim as an insurance company, when I say I still using the word as an insurance company, although it's a surveyor, okay, as an insurance company, when he pays, he has every right to recover the claim outcome. Okay, that is called, we call it a subrogation. So can he recover from the security company because they are failed? Okay, please think about this. Now, I got some suggestions. We come to the claim situations and all those things. Now, process complaints. You have to tighten it up because the way the business is done is changing. Make a checker. Please do that. And whenever maker checker concept has failed, believe me, that employee or the system is smart enough to taste the blood. And even if there is no fraud also, that has to be triggered and you have to have an inquiry and don't pardon breach of process. Customer may come and then like the bank which claim happened, no? 15 transfers happened. Breach of process, prescribed process. Everywhere if you see non-compliance of the prescribed process, that's it. Next is confidentiality. Banks are giving excuse that claim confidentiality. Till when do you want to maintain the confidentiality? Can't you exchange the notes? Recipient banker details, I don't want to give it, I don't want to freeze the account because I have not suffered the loss. Unless I get written instructions, I cannot freeze a customer's bank account. And here fraud is happening. The customer is fraudulently taken. Fraudulent KYC details are given and taken the money, he has closed the account. Still, you don't want to maintain confidentiality. You don't want to share the data, CCTV extract and everything. And increasing cyber crimes. And firewalls have to be continuously improved. If there is a breach of firewall, the firewall is not adequate. I'm not saying new virus, you have to protect all these things. That is the responsibility of the software provider. If he fails, can I recover from his policy, software company's policy? Now, here is the new wording I saw from the London market when I was just looking at their cyber attacks. Cyber attacks supported stroke sponsored by the governments, alien governments is excluded. They are not using the word terrorism here. Cyber terrorism, they are not using the word. Mark this. Okay, cyber attacks are increasing. Recently, most of you are aware, even my friends from Bangladesh would have seen this. AIMS Hospital in Delhi, there was a cyber attack. In Mumbai, power station, there was an attack. And I don't want to give the location, 2 insurance companies, 2 third-party administrators, many things, data have been hacked and ransom attacks have happened. Okay. Will they get classified because this wording cyber attacks supported, sponsored by the government is excluded? This is an emerging warranty now. Please, all of your bankers, insurance companies, everything, please be aware of this and suitably structure your policy words. And don't blame the surveyor when he invokes this when the claim happens. Okay. Next is DGCA, that is a subsidiary of RBI. They offer Deposit Guarantee Corporation of India. They offer protection to the deposit holders. Up to now, it has increased. It got 5 lakhs. 5 lakhs. It's with 5 lakhs. Now, in excess of this, take the policy. Markets are ready to offer. Okay. This protects government from additional response because government has to pay that money. If it is nationalized bank, if it is private cooperative banks, you don't know where the money goes. Already, I will share the one CNBC US uncovered FDA deposit holder. Already, US government is formulating a scheme. They are thinking of a structure. Some structure we can think of that in India and in your countries also. London market is ready to offer the RA protection. Now, AI is becoming big. Artificial intelligence. See how field intelligence unit of that country US. Okay, I'm finding it very difficult to not to blurt out that name. Okay, that bank has a very robust field intelligence unit. How could they do that? Can we not have that alert, system-based alert, these for those type of transactions? Can we not think of that? Next is, we have to sensitize the staff member, bank employees, insurance companies employees, police, customers for the emerging cyber threats. How do you sensitize them? Continuously keep sending the messages. Don't share your KYC details. Okay? And debit card, credit card providers, they have to improve their security features. You know, when they learn, when insurance companies invoke subrogation rates against the credit card, when it touches their P&L, they will tighten up their sleeves also. The new challenge we are going to get, cryptocurrency frauds. I still How does it fit in? I still don't. I'm trying to figure it out. Any crypto frauds, where will it come? Because of cryptocurrency frauds, if the bank goes bankrupt. Okay. Silicon Valley, I'm not, it's not cryptocurrency, Silicon Valley Bank type of situation. It's the time now to review the policy structure itself. Gone are those days physical hazards, exposures, and then you're adding the covers, complicating the policy, which is becoming difficult. Next is create a platform for swift action against the process. Unless you create deterrence, name and shame, imprison the fraudsters. Fraudsters keep on, they have tasted the blood. In fact, in that bank where the employees have tasted the blood when they showed the claim, he joined the local political organization and he is police are protecting him. Okay. More details means the name of the state, party name, everything will come out. So I would like to avoid giving those. Ransom attacks are increasing. And you know, one ransom attack, 400 crores, from 400 crores, he has come down to 40 crores. Still, on police and IB, Intelligence Bureau, they're all acting beautifully, they're coordinating it. Only when you see the way, the quality of cyber police involvement, support, tackling it, you'll get to know the intelligence of those police people. Hats off to them. But unfortunately, they are overwhelmed with the load. Is it time? This is suggestion to Dr. Agarwal also. Risk Management Association with the IRDA, IBA, Journalists Council can jointly work to review the policy conditions in each of the respective countries. The time. Now, this is displayed in every bank now. This is what banks are going to proactively based on RBI suggestions. Don't share the details. You keep on getting messages also. Most of us will be continuously getting from our banks, but we just delete it. You know what happens? All of us are aware of this. But momentary loss of presence of mind, this is what I call it. If somebody calls me, you have got refund, you have got some scheme, I've been listed in some award, I got all the things, please give your data means OTP or something, I'll give it. Then my card is gone. Okay. This is how it is coming. Then this message I got through the State Bank of India, this one, regularly I keep on getting it, it is alerting. This is from HDFC Bank, I keep getting this message. Regularly they send it, prompt. I really appreciate that. Daily one alert. It may cost. Now even sending messages doesn't cost much. Now, my suggestion to conclude is that, can we think of sharing claim data? Because each claim throws up so much of, because fraudsters are always ahead, 1 or 2 steps ahead of us. Can you not take that information? Because there's one surveyor, I got so much of information. I'm sure like me, there are a lot of surveyors, insurance companies. We pull the data, modus operandi of the data, share with the bank staff, train them up, and start building firewalls, review your process. Is there any gaps in your process? Can we not do that? Share with the police. Share it with your bank training colleges. And then review the conditions. And observe due diligence on confidentiality. How much confidentiality? Together we work together. Banks, insurance companies, public sector, private sector, everything, because we are trustees of the public money. I go back to my original statement. I have a greater sense of responsibility as a trustee of the public money than as any other stakeholder in the entire tick. My responsibility is more toward the poor deposit holders, simple policy holders who over a period of years have given the profit to the insurance companies. Over a period of giving profit to the banks, or which they are doing. So with this, I conclude my sharing of thoughts and the presentations. Any questions, and then, sir, you can take over. I stop sharing.
Yeah. Thank you, Mr. Prasad, for an excellent session. And actually, we need this practical case studies as insight to get more knowledge. And overall, what I see in the industry, both banking and insurance, there is a huge knowledge gap. Because in spite of knowing everything, I see a lot of professionals giving OTP and losing money. Just 3 days back, very, what I can say, very renowned, you can say a teacher or a resource person, he lost 31,000 in some sort of bank fraud. There was a complaint for a delivery, and he gave an OTP, and 31,000 was lost from his bank account.
Yeah.
So this knowledge gap needs to be plugged. And as you rightly said, there needs to be a fraud repository, because even after so much spending so much year in an industry, we don't have a fraud repository where we can get details of what fraud is happening. And particularly in the insurance industry, what happens once we detect a fraud, we simply reject the claim. There is no next mechanism to catch hold of that culprit. Then what he does, he again tries to catch hold of some new client or new person to do the fraud. So regulators should seriously look into it. So let me take a few questions from the participants. You can also unmute yourself, and you can ask the question.
Yeah.
I think there was a question from
of Mr. Jayaprakash Menon.
Yeah, please, you can.
Yeah. The question is, can the employees not report such cases to the banking ombudsman? It is not only for customers to report, employees can also do so. It will have to be reported to RBI. See, Mr. Menon, thanks for the question. Employees find it very difficult. Yes, those type of fraud and all this. First, internally, they report to their audit department. They have to collate and then escalate it to the ombudsman and everything. Because actually, even in RBI also, they don't have any platform, single platform to take these complaints. Banking ombudsman, they report and do what? So how do you tabulate this case? One is they are protecting from the claim, recover, build up the data. That is where I said pool the data and then share it. Create a structure, because please remember, banks are still bound by the confidentiality clause. So we have to overcome. That is where I'm posing a challenge to them to till when we have to observe the confidentiality. Okay. This is where I want to put. Like next question is, like regulators overseas fine banks. Indian regulator also they have to impose heavy fines which actually, yes, this is where I'm coming to build heavy deterrent. And when you impose the penalty, you would have seen some cases are there in, at least in general insurance judgments I have seen. The judge has said specifically the fine has to be paid from the shareholders' money, not from the policyholders' funds. Like that, they give the judgment. Some of the breach of policy conditions, some penalties and everything, they have laid the fine on the shareholders' money. It should not be touched on the policyholders' money there. And in some cases, the penalty, personal penalty has to be recovered from the employee's gratuity. Those type of judgments also we have seen. At least IRDA is putting this type of a situation, recover from the shareholders' money, not from the policyholders' money. Whether something similar we can think of in the bank, the bank, the money will be quite high. It will be very difficult. But we have to find a way out of this. Somewhere we have to make a beginning. Please suggest for an OTP validation even for ATM withdrawal. Yeah, this is where private banks are compulsory. Even I can't opt out of OTP in a private bank. Even if I give it in writing also, they said we are not bound by that, they still send an OTP. Whereas public sector bank, they say we are bound by the instruction request for the client, sir, they say. This is where the OTP, which I told is a nationalized bank. That is where I'm suggesting if client wants or not, you send it to the registered mobile. Let it go there to prevent these type of claims. Somewhere we have to make a beginning.
There is a question from Mr. Ravdeep Sodhi also. If you can take. Mr. Prasad, can you see the question for Mr. Sodhi?
Financial and cyber claims are the biggest crimes these days. So would like to ask, related to the cyber insurance claim, did you see or observe the cyber risk assessment of the insured was not done properly by the insurer before assigning the policy? Later, there were issues happened in the claim submitted by the insured. Does it means that the underwriting was not done correctly. You have hit the nail on the head. Proposal form is very critical. Cyber liability of a bank is different, of a BPO is different, software company is different. So we have to underwrite these. When a cyber liability happens, not only bank software provided by the software company provider, your software provided by a credit card company, third party, even my own mobile, if I download the apps, which I gave the case, no, when that happens. So should we build firewalls to this, and the policy should it respond? If the entire transaction happens outside of the bank software, like when I download the mobile, I give my password to somebody, like son giving me the debit card password to the father and giving it to the son. When those type of things happen, when there is no, clearly you should say there is no liability, that's where we should be able to identify those type of cases. So underwriting cyber liability is extremely tricky. And that is where we come, underwriter's mind, we call it in liability insurance. Did the underwriter intend to cover? When I get a chance to how do you underwrite liability policies, underwriting liability business is more trickier than the property underwriting, because these are all risk wordings. Unless you exclude, when I say all risk wording, the classic case is if it is not excluded, it is included. So you should know what you want to include or what you want to exclude. Okay, so that's a different approach altogether. Yes, it was a clear case of inadequate cyber liability underwriting in the past.
So we are coming close to the session. Just
Yeah.
last question from Mr. Mrityunjay Kumar. You
Yeah,
can
what
just
about the fraud done at the part of the bank staff who mislead the customers in buying cross-sell products at the bank customers? It's very difficult to establish inadequate selling or insufficient selling. There are no bank guidelines, because that goes under the bank assurance business if he doesn't advise properly. For example, they always say that you take policy for a loan amount. The sum insured is different. Let us say loan is 1 crore, asset is 1.5 crores, sum insured has to be 1.5 crores. They don't do that. Those types of challenges, mis-selling is a big risk that we are facing in handling the claims.
Prasad,
Yes, sir.
Prasad, if you, with your permission, I can just add. In fact, I have put it on the chat box also, Mr. Mrityunjay Kumar. Mis-selling is the responsibility of the intermediary, not the insurance company. If the bank staff mis-sell the policy, bank is responsible.
Yeah. See, when
Yeah.
bank, normally mis-selling when it happens at the bank desk. Okay.
Yeah.
He's a
Then
bank
the third
employee.
party.
He's a bank employee. But he's acting on behalf of the insurance company who is selling the product. So he's
that is true.
mis-selling the insurance company's product, not the bank's product. So that is where we get into the tricky situation of on whose behalf did he do the business. But
No,
as a
normally
surveyor,
what we
when
do
I
in the
go,
banks, in the banks, we make sure that the selling arm like the DSA or even our own staff are trained properly, and any instance is taken as if it is our own responsibility and treated. If that is not done, if we simply pass it on to the insurance company, the mis-selling will become rampant.
that's becoming the problem. And just since you're on the this one, this case of Field Intelligence Unit is your ex-employer. I've given a clue to you. Yeah. I think that's all. Any more questions?
no, I don't see any more question. But the topic that you
If
have
any
chosen.
questions are there, you can always post it to me. My email
Yeah,
ID
sure,
is
sure.
there. You can send it to me, sir. To the best possible extent, I will respond back.
Yeah. So,
And I'd like to thank you before I hand over to Dr. Agarwal. I would like to thank you for the patient hearing. I hope it was audible and then the case studies were useful to you. To the best possible extent, I've tried to hide the real names and everything. If I've blotted out, my apologies to both the banks and then the customers. Thank you very much. Thanks for your patient hearing. Thanks, Dr. Agarwal, for giving me the opportunity.
Thank you, Mr. Prasad. It was an excellent session, and I think I really enjoyed, because once you go through these practical case studies, it helps you to reconnect. You can connect easily what can be the practical situation. And being a surveyor, I think you must be coming across this situation more frequently. Maybe there are some lapses in underwriting. Then this at the time of claim, then everyone has to suffer. Both insurance company, customer, everyone has to suffer. Then again, there is a gap between in the bank assurance policies where there is no much coordination between bank and insurance. So at end of the day, we need to plug this knowledge gap, and I think we need to organize this sort of session more frequently so that we can address all the issues. And I would request all participants to send their feedback, and if they have any questions, they can direct it to Mr. Prasad. And we would be again having a next session maybe on the 4th Saturday. We will be keeping you update. So you can visit our website, or you can keep in touch with us to know the details about next session. And we would also be happy to get your feedback on if for any new session that you want to have. So thanks all the participants for joining from Bangladesh, from Nepal, from India. So thanks a lot again, Mr. Prasad. So, and this recording would be available in YouTube also. So we'll meet you again. Thank you, everyone. Thank you, Mr. Prasad. Thank you, Mr. Sridhar.
Thank you, sir.